Hello and welcome. India's politics and economy are in transition together. The politics because there's a new government coming, the economy because there is serious work to be done. What needs to be done from an India Inc. point of view? Well, I'm joined by Gautam Thapar, Chairman of the Avantha Group, and we're going to ask him what lies ahead. Thapar, thank you very much for speaking with us. So we are in an interesting transition point, not for the first time, of course. What are the key challenges that the country faces in the macroeconomic front, to the extent that they related to India Inc. and some of the challenges more specifically that India Inc. is facing?
The challenges have been clear for a while. I mean, so even though that things have started moving a little bit in the last quarter, the postponement of a lot of spending decisions into the next year, I think, are going to pose a big challenge for any new government coming in, because the postponement of that, the lack of growth, the fact that you have rating agencies out there, etc., make it not a very easy environment in which a new government has to come in and maneuver the way through it. At the same time, inflation is coming down, but the high interest rate policy of the Reserve Bank of India helps on that front to some extent, but at the same time it is hindering fresh investments coming in. And I think that it's a fallacy to believe that somehow or the other there are $200-300 billion of foreign money waiting out there to actually invest in Indian infrastructure. You've not given them the framework that allows that money to come in. This money is there, but it's not looking to come into direct projects. The lack of deep debt capital markets now, you are really beginning to see this problem, this problem now becoming a multiplicative problem, because your banks are now sitting on huge loans which have been given to infrastructure projects, which ideally should have been financed in a very, very different way. So if there's one thing the new government should do, in my opinion, is to figure out how very quickly to actually put in place the framework for deep debt capital markets, and basically direct more and more of the corporates and other sector to go and do your borrowing in there. Yes, foreign money will come in there, because a huge part of the risk element is done in a very different framework to the banking framework that is done, in terms of provisioning, in terms of so many things that prevent this from happening. So yeah, we need that to happen if you want infrastructure to get going. Otherwise, the numbers of stressed bank debt today, or stress asset in banks book, I mean, you different reports talk between 150,000 crores to 200,000 crores. How are you going to resolve this? And if you don't resolve this, how do you expect growth in infrastructure to start beginning?
Because so you're saying capital in itself is one key,
very key
aspect that needs to be looked at.
Very key.
What about at the company level? I mean, there are of course banks which are facing some stressed assets. Some companies are not doing well, but there's a rest of corporate India
I think
well.
that you look at the fact that there's been virtually no capital expenditure in capacity creation in the economy in the last 2.5-3 years, especially on the corporate side.
Okay.
All right,
and you're speaking for yourself as well.
I'm speaking for everybody. Can you tell me anybody who's built a new plant, anybody who's made major investments? No. Now, at the same time, the economy has grown. It's not that we've not grown. Maybe real growth has not been there, but you've grown. And at some point in time, I think you're starting to hit this point where the capacity available in the economy is now reaching a point where, where at least as far as corporate India is concerned, I can honestly think that, profitability and margins will start improving, because you're now being able to say that, well, I don't have any more to give, so I may as well raise prices and pass my cost through to you. So in a certain sense, by dealing with the supply side issue through high interest rates, you are now created the problem on the other side, which is that now the supply side is getting constrained for different reasons, but demand is there. I mean, even if you say growth remains 5.5-6%, that makeup of that growth and who's actually supplying the goods and services for that growth are still by and large Indian companies. But if I haven't invested in any fresh capacity, then and neither has anybody else.
Can you give me an illustrative example from either paper?
Well, you look at
paper.
There's been nobody invested in a new paper mill now. I think it's been 2 years or 3 years, but demand for paper.
And you're saying there could have been investment as opposed to imports?
If you hadn't gone through this, imports at 62 rupees to $1 with all the instability. Don't forget, I mean, it's a trader-led environment. It's not that the companies who are exporting paper into India look at setting up a distribution or anything like that. It's just there's a trader, he's a middleman, he has his risk profile,
right?
All right, and then his customer has his risk profile. The customer's risk profile may say that, look, I don't want to wait 6 months for a supply. I don't want to deal with currency volatility. And in the current growth environment where I'm collecting money becomes very important, I don't want to have extended working capital cycle. All of these three things will mitigate against too much imports coming in. They will come in, but you will have this.
So you're saying in paper that, for instance, there's been
there
no
has
capacity.
there's been no new capacity coming in. Whatever little bit has come in has got absorbed. When we look at the numbers show that there's actually excess capacity in the country. But when you look at prices, the prices have been firm.
So
now
why is there
for
that discrepancy between?
some of the well, it's how you report. You know, I mean, the installed capacity versus utilized capacity. I don't think these numbers. I mean, my one paper mill of mine can you can have a variation of 20% in output simply by the grammage change. You know, so in many commodities, a lighter weight means lesser volume, a heavier weight means more volume if you measure in tonnage terms, right? So it's those, but by and large, for 2 quarters now, we've seen actually firm to good pricing, you know, across the board, and so it tells you also somewhere that while demand is not exploding, it's steady, it's there, and customers are preferring to go to Indian suppliers to shrink the supply chain, to shrink the time in the supply chain, to take some of the volatility out of it in order to be able to run their businesses better. Now, how will this continue, you know, 1 or 2 years down the line? I dare say it will continue for a while until a new government is in place, until policies are not just announced but made effective and growth starts reviving. And for that, I think if you want to get better quality growth, as I said, I think a major reform of debt capital markets is needed. And you need to make it, you need to incentivize people, companies, borrowers, investors to go to that market to actually finance infrastructure.
So we've also seen zero's industrial growth.
Yes.
And what does that mean? I mean, I know it means that industry has not increased its output compared to last year, but what is the manifestation of this been?
The manifestation of this is you've seen margin shrinkage over the last 2-3 years. You're now beginning to see, you know, margin expansion. So it means for Indian companies, it means a huge amount of cost out of the system. But it's also meant very, very disturbingly no employment growth. And I think that's, so if you look at manufacturing as a percentage of GDP, the numbers speak for themselves. And I, for one, don't believe that services are going to create all the jobs that we need in this economy. So you're in this conundrum where you've got a situation where the services growth has still been reasonably healthy. Industrial growth has been nil. Infrastructure growth has been very poor. And there's been zero employment growth, whether it's organized or unorganized. So, you know, for a company, if it's not sustainable to not invest, and it isn't. I mean, if your economy is growing, you want to invest, especially if you have the product, the technology, the distribution. That's an unhealthy sign. You know, from an economy point of view, having zero employment growth is very unhealthy, especially the number of young people you're bringing in the world into the workforce. So, both of these things are hugely problematic and are going to be very big problem for any new government that comes in.
Right. So what's the, I mean, in some ways I'm asking the same question again. So what's the one thing that would give you the comfort to go back into an investment mode? Debt markets and all will take a little longer.
It's how you, well, frankly speaking, I mean, they may take a bit longer, but at the end of the day, if my growth is restricted to my retained earnings on my balance sheet, then that's the rate at which I can grow. There's been no, forget about debt, there's been no equity capital market activity in 3 years. So what is the government going to do any government going to do to get equity capital markets moving? We need IPOs, we need that money, that's permanent capital coming into the country. We need that to happen. That is not happening. All right. So the savings rate has dropped. Money has gone out of that into gold, into real estate. All right. Not easy to get out of these investments also. So it's not, you know, we look at very often at the broader, you know, macro picture. But if you actually look at some of the micro things underlying it, these are areas where money is locked up. What do you think would happen if gold prices crushed, you know, 20% after the new government came? Anybody and everybody's invested in gold. What are they going to do? They're 20% poorer technically from the time that they bought the gold. Real estate is not easy to get in and out of today. There's a liquidity problem in that sector. I don't know how the government is going to, you know, to sort this out. One way is to bring buyers back into the real estate market to get the transactions going. So to me, next budget, I think there need to be a lot of thinking around long-term incentives to be given to get some of these cycles moving in the right direction. You need the you need to start getting the momentum going. So you need to do something for the real estate sector that helps the buyer to come back into the market and start buying property, and thereby help the financiers and the developers to start working together to push this out. For the infrastructure side and for the industry side, you need to get both debt and equity capital markets moving, so that actually again the liquidity starts coming in the system, and people are saying, okay, it's easy for us to raise money, or it's getting easier for us to raise money. Let's dust off my plans. Let's go out. Let's start growing again. Let's start looking at investment, because I know that a year down the line, 9 months down the line, I'm able to go out and raise the capital needed to actually move it to the next level. That kind of atmosphere is not existing. So what you've seen is a stock market that's going up, but you're not seeing any other activity, all right, anywhere. So I look at it as saying that, a foreign investor, and because most of the money coming in is coming from overseas, is looking at the Indian market and saying the current account deficit has shrunk, so the rupee should be reasonably stable. The RBI's policy stance is that inflation and rupee stability. So that's two strikes in favor of a stable rupee. We're not going to see the kind of nonsense we saw in July, August of last year. So, and we are looking at corporate earnings beginning to improve as cost out of the system and capacity constraints and everything start coming in. So this is a good time to buy Indian equities right now, because that's what we are expecting. And a new government should help in pushing this momentum along. For the new government to really make it worthwhile, as I said, for industry and manufacturing and infrastructure, both the capital markets need to get going. On the other side, what I said earlier, we need to have this going.
Right. So what's the one thing that you feel will, let's say, create jobs? Let me rephrase that. What's the one thing that you feel can help meet the aspirations of young India?
See, I think that again, because of too much centralization, and then because power has shifted. We keep talking about that power shifted to the state, but we don't appreciate the fact that a large part of your administrative infrastructure is still centrally controlled. So now you have a situation for most businessmen, entrepreneurs, whatever it is, that you're dealing with central laws and a whole set of state laws which the state governments have bought in themselves, either because they want to get away from some of the central laws. But without realizing that for a company, it doesn't matter state or center. I have to follow, the laws. And you're getting into all of these disputes between state and center on very issues, environmental issues, licensing issues, X and Y and Z. And unless we don't figure out a different way they don't figure out a different way for the center and the state to work on these areas, I think the problem is going to continue. Second, where are jobs created? I've said to many chief ministers that, it's nice you bring me here, you want me to be in your vibrant whatever thing and all that. And I understand, I'm good for the PR, I'm good for the fact that a large investor, large companies are investing in the state. But a 2,000 crore investment in your state is only creating 600 jobs. So we are not the guys who really do the job creation. We are the guys who do the better job creation, in the sense that we pay better, we employ more skilled, better educated people. But that's not where this country is. What we need to do is to basically, in my opinion, free up anybody. I was given a thumb rule. I said anybody doing 200 crores in sale and employing 200 people, you look at the compliance rules that we have for them, you should get rid of 80% of them. They're not needed, right? And make it easier for them to be in business, make it easier for them to grow their business. If they grow their business, you will get the employment, because there are 200 crores, I can tell you he'll be employing the same 600 people that I'm employing at 4,000 crores. And every one of his investments, because he's capital constrained, he will go for the labor component first, till he gets to a scale and size where he can start saying technology will start playing a role. How many people, entrepreneurs, have $100 million to set up with sophisticated technology? Very few, so they will go that way. But is the failure of even 1,000 or 2,000 of these companies a year a systemic risk to our country? No. Even 10,000 of them could fail in a year, and it probably would not be a problem.
As opposed to those 30 which are leading.
Exactly. So look at where jobs are created. Look at where and free them up, and say it very clearly that once you cross 500 crores in revenue and this thing, etc., these new set of compliances will now kick in. All right. And every company has to file a balance sheet, every company has to do this, etc., and it has to be a consolidated. Yes, I understand that there will always be people who will try and get around the system, but it's happening today also.
Right.
All right. Make it a little easier for them not to do it, and they'll do it. And I'll give a great example. Crompton Greaves has the license to run the Jalgaon power distribution from Maharashtra. Now, we took it over, we did our survey, we've invested about 85 crores into it. We had to, I think it was 48% was the loss if you take both non-payment, line losses, X and Y. That's now down to 12%, okay? But what is most interesting is that we don't have a single delinquent payment. Every single customer of ours pays 100% of their bills on time. Why? Because they get electricity when they want it, when they need it. They don't get power outages, etc. So as a customer, he says, look, I'm getting what I've paid for. So I'll pay for it. You know, whereas the opposing thing is that why should I pay for it? Because I don't get it. I have outages. I have blackouts. Nobody comes to tend to things. There are hours and months. And then when they do give me electricity, it's when I don't need it, when I can't run my factory, when I can't run my, you know, etc. And I think that if you take that as a microcosm and you put it into the larger SME sector where the jobs are created, I think you'll find exactly the same thing, that I don't get the electricity when I need it. I only get inspectors. I only get this, I get that, etc. So why would I want to follow and comply with laws? And in order then to make me comply with laws, you put even more laws on top of me. Free me up, free them up, and I think you will find a very different employment and job creation opportunity. And at the end of the day, these guys go out, you know, they spend money, they drive consumption in the economy. Why not? It's not the 3,000 or 300 or 500 that I employ at higher wages. Yes, they do as well, but it's the lakhs that get employed at lower wages who also fuel, you know, consumption. We need to do this, and we need to figure out a way of doing it fast, because I think you will find a momentum that gets going in the economy, which will be irresistible to stop in its own way.
Right. So disintermediate and expand the entrepreneurship. I mean, really, that's what
we all, as human beings, you know, what do you want when you're young? You know, you have aspirations. When you were 15 years old or 18 years old, why do we like to believe that just because somebody comes from a poorer background or a different background that he doesn't have aspirations? He has aspirations, and those aspirations need to be met. His aspirations are that I'm living and growing up in a world where I'm completely interconnected with everybody else. At a press of a button, I can see, you know, what's going on. I get now today Twitters, and I get Facebook, and I've got FaceTime, and I've got this, and I've got that, etc. I switch on the TV, I see how the other part of the world lives. I mean, so the world has come into my home. It doesn't matter that my home is in the deepest recesses of Telangana. It still comes into my home, all right? And that is fueling aspiration. But those aspirations are not being met by an economy that's structured on the basis of overzealous compliance, overzealous rules, which hinder all of this. You're just not releasing people's aspirations. No, you release those aspirations, and regulate the guys who need to be regulated. And what are you regulating for? Monopoly practices, all of those things. All those laws are already in place. Why are you having the same set of rules for a 50 crore company and a 5,000 crore company? It just doesn't make sense. Yes, accounting principles fine, other basic principles fine, but do you really need a private limited company with 50 crore to comply with 69 sections of the Companies Act?
Right. So I think that makes a lot of sense. I mean, if you want to meet aspirations of young India, first free up the next layer of entrepreneurs who will build enterprises that will
regulate us. Regulate us. We've already become big enough. Yes, I understand the need for regulation, and I'm fully for it. But why are you doing it to these guys? It's not needed for them. And the Companies Act and these things will be said, listen, if you're in this, you don't need to comply with 90% of the act. We don't need to. Yeah, just you have to file your balance sheet on time. You have to have a qualified accountant looking at an audited firm, and that's it. You file it and get on with your life. Yeah. We did a little analysis just at a Bilal level that if I look at the compliances required for us, we asked the company secretary based on the how many. There are 23 laws that we need to, different acts we need to comply with. Okay. Out of the 23, we asked them by risk factor, can you list the stuff? So the top 8 or 9 of those laws all carry criminal sentences with them. So you tell me, I mean, how do you expect to work in this environment? Yeah? And the same thing applies to somebody down there as much as it applies up here.
But that's a very interesting and critical input, I guess, if we were to frame industrial policy and view it a little differently.
Absolutely. But at the end of the day, we have been complaining for years that the cost of doing business has gone up, not because the cost of corruption has gone up, the cost of doing business because the cost of complying with new sets of rules and regulations, not just in India, but because you're part of WTO, outside of India, or you're signing all these wonderful bilateral treaties around the world. But if every one of those treaties increases also our cost of compliance. And in its own way, because you're not providing a dynamic environment for your small and medium enterprises, the cost for them is going up disproportionately high.
Right.
You know, I can still might be able to deal with it. Can you imagine a guy down there, you know, having to suddenly get a call somewhere there's somebody's intellectual property you've infringed? Poor guy.
Yeah, and the risk of not
Yes.
dealing that is pretty high.
It's very
because
high.
You're not
Very high.
really helping the
Very
economy
high.
grow and so on.
And also, if you look at TPP and TTIP, which is the two new trade frameworks that are being looked at, these are standards based. So they're not tariff based frameworks,
Yeah.
they're standards based. That's a whole different level of compliance altogether. Now I have to have standards of human resource engagement in my plant in India that meets those standards before I can export a product into.
Last question. So, are you looking ahead with optimism, and how much?
Cautious optimism. Yeah, I think that, see, one way of looking at it is, I mean, businesses are doing reasonably well. They'll grow at whatever 6, 8, 10%, whatever it is. You know, they're making money. You know, it's fine. But if the only purpose of running a business was that you sort of didn't do anything and you made money, then I think I'd be very ecstatic and say fantastic. But if the purpose of having a business is to help it grow faster, to do different things, to diversify, to invest and continue to create jobs and create new opportunities, on that front, I think I'm still cautiously optimistic, because I think the new government, whoever it is, in whatever form or shape it takes, has some very basic fundamental issues to address. And I have given 3 suggestions. I'm sure that there are people far more wiser than me who will give 30 more. But you know, just 2 or 3 basic things that need to get going, and I think you will see the spirits, you know, come back.
Mr. Thapar, we've run out of time. Thank you very much for speaking with us.